Hello guys, a very good evening to all of you. Welcome back. So guys, from this particular session onwards, we are going to start with our IE&IFS Module B. Okay, very interesting one and full of concept, right? So when it comes to Module B, we have these many units which are generally part of this particular one. And I hope you guys are familiar with these particular one. And you have to build your basic understanding and you'll experience mostly statement based and applied question from this particular module, right? So economic concept related to banking, with which start with your fundamental of economics, microeconomics and macroeconomics, and type of economies. Then we have law of demand and supply. Then we have money supply and inflation, theories of interest, business cycle, monetary policy and fiscal policy. Then we have system of national accounts and GDP concept. And the final one is union budget. And you can expect a question from each and every single units in your upcoming examination. So when if you talk about all these particular units, so most of the time the question is around the like most of the time it is application based or applied based questions basically, and even full of statements. Like, so I'll give you a fair idea okay, what type of question they have asked in the past, and then one by one, similar as we have done with our module A. So similarly we'll do like unit wise concept and a set of practice also, right? So first, this is the introduction session for module B, where we will be talking around each and every subtopic, including all topics and their PYQs and all. So we will start our today's session with the unit number 12. So first unit, which is all about the introduction to economics, micro and macroeconomics and type of economies, and the fundamental questions are related to economics, like what to produce, how to produce, and whom to produce. So these are the topics. One question most of the time you'll see around the differences between microeconomics and macroeconomics. Then fundamental question, this get asked this year also. Okay. Then we have type of economies, market economy, command economy, and mixed economy. Sometimes the differences, or sometimes one question for 2 marks, which a statement is incorrect about your command economy, market economy, and mixed economy. Sometimes there is a 1 marks question around these particular one. Like question is like, which of the following statement is true or incorrect about the your let's say it is about the features of command economy or market economy, right? So like every time you'll see on an average 2 marks question based on this particular unit. So mostly the question, like these are the 3 units, 3 subtopics, sorry, and you can expect one question from each, and you cannot eliminate. You have to have prepare all the 3 subtopics from this particular unit. So let's have a look around the question type. So first question is, which of the following statement about microeconomics and macroeconomics, okay, so macro versus microeconomics, are correct? So this is the very first introductory session. So you do not have to judge your performance. You just have to take an idea about the entire module. Okay, that I'll provide you with the help of PYQs in past, right? So first question is about the differences between micro and macro. So when it comes to micro, it generally deal with the individual, how individual or companies they make their decision, like their choices and all. Okay. When it comes to macro, so it has a broader areas, right? So demand and supply is a topic of macroeconomics. Inflation, recession, economic growth, employments, these all are the subject of your macroeconomics, right? So the question is, you have to find out the correct statement. So microeconomics studies the behavior of individual, consumers, and firms in decision making, 100% true. Macroeconomics emerged in its modern from the after the publication of Keynes' Journal Theory of Employment, Interest and Money in 1936. This is also correct. This is completely static in nature. Microeconomics focus on aggregate indicators. So now this statement is wrong. Why this is wrong? it is mentioned microeconomics focus on aggregated indicators like GDP, inflation, and unemployment. This is the study area of macroeconomics, not the microeconomics. So this is wrong. Macroeconomics deal with the overall performance of a national or regional economy. True. Adam Smith, The Wealth of Nation. This is the book which was published by Adam Smith in 1776. Laid the foundation of microeconomics concept. 100% true. So 1, 2, 4, 5 means option C will be right. Sorry, not C. 1, 2, 4, 5. 1, 2, 4, 5. 1, 2, 4, 5. D. Option D will be right answer for this particular question, right? So statement third was incorrect. Macroeconomics, not microeconomics, focus on this particular one. So this question is generally for 1 marks, and if paper label is easy or easy to moderate, so it is for 2 marks. Next question. Which of the following statement about the fundamental economic problems are correct? So this was the question from your 2024 25 May examination. Okay. So they asked one question for 1 marks around the fundamental questions of economics. When it comes to fundamental questions of economy or problems of economy, so it includes 3 questions, fundamental questions. One is what to produce, how to produce, whom to produce. And the economic structure or the division or type of economies is generally based on these 3 questions. Okay, like let's say what to produce, how to produce, when to produce. When it is decided by the government, so it is a command economy, right? When it is decided by the market, it is your market economy or capitalistic economy. When it is decided by both government as well as the private entities, so it is your mixed economy, right? So every society, regardless of economic system, must address 3 fundamental economic problems. These are what to produce, how to produce, when to produce, whom to produce. 100% true. The question what to produce involve deciding the type and quantities of goods and services, including balance between consumption and investment goods. 100% true. How to produce focus only on selecting the most advanced technology for production. It is not only about the selecting most advanced technology. It also involves the other structural problems of the economy. So this is wrong. For whom to produce, address income distribution and whether resources are allocated equitably among the different group of society. True. The 3 economic problems are only relevant for capitalistic economy. No, they are relevant for all type of economy, whether it is capitalistic, socialistic, or your mixed economy. Capitalistic economy, which is also known as market economy. Socialistic is also known as your command economy, right? So this is incorrect. So that means 1, 2, 4. 1, 2, 4 means option C will be right answer for this particular one. When it comes to how to produce, it is not only about the technology choices, also it's deciding who will perform production and what resources will be used. When it comes to statement 5, these economic problems exist in all economic system, not only in capitalistic economies, right? So I hope this is clear. So this is the basic idea, like this type of questions you guys are going to face in your upcoming examination. So while we'll start with the unit wise concept and MCQs, the very first set, so you will be able to make sure, or you will be able to understand or answer these type of questions. So when one good thing about the module B is we have limited areas, and you have to have build your basic fundamentals, or you have to develop your concepts around these particular topics. Once you done with that particular one, you believe me guys, you will be able to solve each and every questions which will be part of your examination, right? Unit 2, which is unit second, so 13, supply and demand. Every year again one question on an average 2 marks question again. So like we have the law of demand, which is also known as demand schedule, diminishing a marginal utility concept, then forces behind demand curve, shift in demand and expectations to law of demands. Then we have supply, forces behind supply curve, shift in supply, then equilibrium of demand and supply, effect of shift in supply or demand curve. Then we have interpreting our changes in price and quantity. So from this particular unit, when it comes to the examination points, so mostly if it is 1 marks question, there will be one question around the law of demand or demand curve, and another question is around the supply curve. And sometimes they ask multiple question also, as it happened in October 2024 examination. So equilibrium is another one important point, right? So again, while once you'll come, like there are some areas like factor determining demand curves. So like when it comes to the demand curve, I hope you know the basic economics about this one. So demand curve which generally slope like this, right? And when it comes to the supply curve, so supply curve that generally move in this particular direction, right? So this is the basic charts. So what are the reason through which by which this demand curve slope to in this direction, or what are the reasons this supply curve move in this particular direction, or the equilibrium is basically where demand and supply, this is your demand curve, this is your supply curve, and this is the equilibrium on which based on the equilibrium basis prices we generally decide the market prices and all. So this is what are the reasons, or what will be the factors above and below this particular one, or that adjustment, how that adjustment happen in the market. So that's generally part of this particular one. Very interesting topic, and you have to have build your concepts around this particular one, because mostly the question will be based on the statements, and they'll ask you the different areas. Like, so they have asked number of question around demand and supply, theories of interest, and money supply and all. So let's practice, or let's have a look around those particular questions. So the very first question on your screen: which of the following statement about factor influencing market demand is are correct? Now this is like, as when we talk about a demand curve, so demand curve is like this. So what are the factors who generally give this particular slope? So that is the one, right? So we have income factors, or it is also known as income effect, substitution effect, and other so many are there, right? So an increase in consumers average income generally lead to a higher demand for goods even the prices remain unchanged 100% true. If your income level will increase, you will do more consumption. So that means there will be high demand in the market. So the another one is the basic fundamental of demand curve is, so let's say this is price and this is for quantity demanded, right? So when we have higher prices, the demand is low, and when we have low prices, the demand quantity demanded is high. That is the basic relation between when it comes to the demand curve. So it generally shows the relation between price and quantity demanded, right? So if there is a higher price, quantity demanded will be less, and if there is a low price, quantity demanded will be high. So whenever we study this demand curve, it is something which generally shows the action and reaction of consumers toward the consumptions and all, right? So if as a consumer you'll get things at a low prices, you will consume more, and as a consumer if you get things at higher prices, you'll consume less. Supply curve, which generally represent the actions and reactions of suppliers, means businesses. They always want to sell their product at higher price. So at higher price, they want to sell more. At lower price, they want to sell less. It is just reverse of that particular one, correct? So the demand for goods is independent of the population size of the market. This statement is wrong. Why this is wrong? Because when in population will increase, the demand will eventually increase. So let's say if in a region we have 100 people, now in that same region due to migration and all we have 1000 people, so they also have some basic needs and wants, so they'll create some sort of demands. So this is statement, it is saying the demand of goods is independent of population. That is saying there is no relation between demand for a goods and population. No, they do have a relation. If there is a like high population, high demands will be there, like economy like India, right? So this is wrong. The prices and availability of substitute goods significantly affect the demand for a commodity, 100% true. It is also known as substitution effect, right? So the prices and availability of substitute goods We have two type of goods. One is substitute, another one is complementary goods, right? So substitute is kind of a replacement. Like for tea, we have coffee. For any other things, like for diesel, we have petrol. For petrol, we have CNG. So these kind of. So let's say for tea or coffee, let's say if you are studying this particular one for the tea, demand, you are creating some sort of demand curve for tea. So let's say if the prices of coffee will increase, so there are more people who will shift to tea. So that is something which will create, which will increase the overall demand for the tea. The reverse effect is when prices of coffee will decrease, obviously people will, there are some people from those who are right now they are consuming tea, they'll shift from tea to coffee. That is the relation, right? So this is true. Cultural, historical and psychological factors can influence consumer taste and preferences. 100% true. If external factor like income, population or consumer preferences change, the demand curve remain unchanged, right? So this is wrong. If external factor like income, populations, consumer preferences change, the demand curve will also change, right? So 134 means no. What we have to find out, we are correct. If external factor like income, population or consumer preferences change, the demand curve unchanged. This is statement, or maybe this there is some problem with this statement. Change in external factor cause shift in demand curve. Yes, so it is clearly mentioned here. Change in external factors causes shift in demand curve. They have mentioned the demand curve remain unchanged. No, this statement is wrong. So you have, if it is C, so you have to do it this. Okay. So this is the one. This is wrong. This is a wrong statement, because if these will change, this will also change, right? It is as simple as that. Let's say you are earning 1 lakh rupees per month. Now, let's say after this increment, you start earning 1 lakh 10,000. So you are earning 10,000 extra. That means your income got increased. So you'll spend that particular 10,000, obviously. So you'll consume more things and all. So that will change the demand curve in that particular case, right? Next one, guys. Which of the following statement about the supply schedule, okay, when it comes to the supply side, it is created by the businesses, right? So, and businesses, they want to sell their product at higher price. At demand curve is for the consumers, they generally want to purchase things at lower price, more quantity at a lower price, and less quantity at a higher price. But when it comes to supply curve, businesses, they want to sell their product at higher price, take more quantities at higher price and less quantities at lower price, right? Because they have to maintain their cost also. So the supply schedule shows the relationship between a market price of a goods and quantity supplied, keeping other factor constant. 100% true. An increase in the price of goods lead to a increase in the quantity of goods supplied. Obviously, yes. At higher price, we want to sell more quantities. The supply curve of goods is downward sloping. No, how it is slope? It is upward sloping. This is your supply curve. It is upward sloping, indicating the higher price lead to lower supply. No, this is wrong. So 1 and 2 only. So that means option A will be right answer for this one. And this is for 1 marks question, right? I hope you guys getting a basic idea what type of questions you guys are going to face from these different topics and all, right? Next one, unit number 14, which is all about money supply and inflation. So there are two subtopics which are generally two different topic which is part of this particular one. So money supply one, I hope you heard about that M1, M0, M2, M3. These are the one. So one question around that particular one, and another question is around the inflation. So when it comes to inflation, it can be it can be related to the calculation of inflation, like indices, WPI, CPI. This year the question was around the CPI things, and it is sometime the causes of inflation, demand pull inflation and cost push inflation, or it is sometime it is factors the effect of inflation, the real income or nominal income, these kind of areas, right? So let's practice some question from here also. Which of the following statement about the functions of money are correct? Functions of money. So money eliminate the need for a barter system. True. by acting as a medium of exchange. So money is generally known for or uses for medium of exchange. Money cannot be used for future transaction as it loses its value over time. No. Money can be used for the future transaction. As we store money has a storing capacity or characteristic. We store money so we can purchase things in the future itself, right? So that is the one. Money help in determining the value of goods and services by serving as a measure for value. So 1 in 3 and you got 1 marks for this particular one, right? So option C is the right answer for this particular one. Money serve as a store of value, meaning it can be used for the future transaction as well. Next one. Which of the following statement about the inflation are correct? Very simple question. Inflation, everybody know, right? So demand pull inflation, when it comes to demand pull inflation, so increase in demand led to increase in prices. And when it is happened, so that is generally known as inflation. What is inflation? When prices of general goods and services got increased, that is generally that economic status is generally known as inflation. Let's say earlier the prices of this marker was 10 rupees. Now it got increased to 15 rupees. So this course of action is generally known as inflation, an increase in prices of general goods and services. As inflation increase, every rupee we own by a smaller percentage of goods and services. Earlier, we were getting this particular marker for 10 rupees. Now for the same feature of marker, we have to pay 15 rupees. That means the value of our money or domestic currency will get decreases, right? So the demand pull inflation occur when aggregate demand exceed aggregate supply. 100% true. Cost push inflation, when it comes to cost push inflation, so increase in cost of commodity increase led to increase in prices, and increase in prices equal to inflation. Now there are so many reasons behind the cost, like cost factors like the plastic, the labor we are using, government taxes, warehousing. So these all are the factors of cost, right? So if anything increase, that will lead to the increase in prices. So cost push inflation caused by an increase in production cost leading to higher prices, true. An increase in money supply can contribute to demand pull inflation. An increase in money supply can contribute to demand pull inflation. Yes, it can. Cost push inflation occur. This is also correct. If we'll have more money, we'll spend more. That means there will be more demand. If there will be high demand, so the prices will go up, right? So cost push inflation occur only when there is a shortage of goods due to a supply chain disruption. No, this is for cost push inflation. This is not the only reason. There are so many other reasons also, like the cost of production, like the plastic cost, the labor charges, government taxes, and others. So this is wrong. So 1, 2, 3 means option A will be right answer for this particular one. Very simple one. So cost push inflation can also occur due to input cost, not just only through the supply chain disruptions and all, right? Next one. Unit number 15, again very important one. So theories of interest. So when it comes to unit number 15, now it is similar to demand and supply, and they have a direct relation between demand and supply. When it comes to theories of interest, it is how we decide, how we means here government or the central bank, they decide the rate of interest. So that is the one. So now in this particular case, demand is generally created by borrowers. They generally borrow money from the banks and all, and supply is generally created by savers or households and all, who generally invest their money or save their money. Now the tendency is similar. As an investor, I want to invest my money at a higher rate of interest, and another side, supply side, demand side, which is created by borrowers, majorly through the corporate houses or individual borrowers. They want to borrow money at a lower price, right? So there is a direct relation between demand and supply, that unit number 13 and unit number 15. So you have to make your fundamentals very well with the help with that particular 13, so you will easily understand this particular unit, right? And there are so many things. This is very important. You can expect at least 3 to 4 marks question based on this particular one also. Sometime it happened, they ask 4 marks question from this particular unit, right? So when it comes to the unit number 15, we have classical theory of rate of interest, Keynes liquidity preference theory, money demand curve, determination of rate of interest, equilibrium basically, where that demand and this is, let's say, this is a demand curve and this is a supply curve. So this is the equilibrium. The demand is generated by the corporate houses or borrowers, and this is supply is by the investors, right? And this is by the borrowers. So where there points like the borrowers is agreeing to borrow that particular money at a rate of interest, and lenders or investors, they are ready to lend their money at a rate of interest. So that point, which is the rate of interest for that economy. So to decide fiscal policy, monetary policy also, we use this particular unit, right? Effect of increase in money supply, shift in money and demand or liquidity preference curve. Then we have Hicks and Hayes's synthesis, which is also known as IS and LM curve, right? Then we have IS and LM curves and fiscal and monetary policy. Basically, we use IS and LM curve to decide the rate of interest in fiscal policy and in monetary policy about the money supply things, right? So, which of the following statement are correct regarding the classical theory of interest? The rate of interest is determined by the equilibrium of demand and supply of savings, 100% true. Again, the demand for capital is directly related to interest rate. No, this is wrong. The demand for capital is not directly, it is inversely related to interest rate, right? So this is wrong. The supply of capital is influenced by saving, influenced by saving, which depend on factors like income and willingness to save, 100% true. Classical theory consider interest as a real phenomena determined by the real factors like saving and investment. Keynes criticized the classical theory by stating that interest is reward for the pertaining with the liquidity, not for the savings. This is also correct. So 1, 3, 4, 5. Do we have 1, 3, 4, 5? Or what we have to find out? Correct statement 1, 3, 4, 5. D should be right answer for this particular one, right? So the only incorrect statement was 2. So because the demand for capital is inversely related to this particular one. So this is the one similar to that demand and supply curve, right? So once we'll come to the foundation things and all, you will be able to make your understanding. And believe me, guys, if you'll get this type of question, you'll get for sure it is for 2 marks question. So you can expect on an average 3 marks question based on this unit number 15. Very, very important one, right? And to understand this particular one, you have to make your understanding very well with unit number 13 itself, right? Next one. Which of the following statement about the IS and LM model are correct? So a rightward shift in IS curve indicate an increase in the aggregate demand due to fiscal expansion, 100% true. IS which is related to fiscal policy, and if there is a rightward curve, that means there is an increase in aggregate demands. A leftward shift in LM curve occur when the central bank increase the money supply. Leftward curve again, okay. Contextually monetary policy raise interest rate and lower income. Contextually monetary policy raises interest rate and lower the rational income. Contextually monetary policy expansionary. No, this is also correct. This should be wrong. 1 and 2. A should be right answer for this one. Okay, wrong. Sorry. B. It is B. Aapka. Something I'm missing here. This is right. This is a leftward in a LM curve when the central bank increase. Okay. Sorry. So it should be rightward only. Again, this is similar to this one. Contextually monetary policy raise interest rate. Okay, it is raise interest rate so that there will be a lower income and all. 100% true, guys. Sorry, I did a mistake here. So what will be your right answer for this one? 1 and 3. 1 and 3 means B will be right answer. A leftward shift in LM curve when the central bank reduce the monetary supply, not the increased one. The another statement, contextually monetary policy is where basically government, the central bank, they are decreasing the money supply, expansionary and contractionary. Expansionary is where central bank is increasing the money supply, where they are cutting down the rate of interest like repo rate and others. And it is about the contractionary, where central bank is increasing rate of interest. So if they are increasing this particular one, it will reduce the money supply, true, and the lending to a higher interest rate and a lower national income. So this is the logic. Why lower national income? Because there will be less supply of money. People will have less money in their hands, so they'll the overall the aggregate demands in that particular economy will come down. So that is the logic. It is very simple. You will be able to make your understanding, and you will be able to answer all these particular question, believe me, right? Next one, guys, business cycle. Very small unit. It will take your hardly 25 to 30 minutes, and it will make sure you'll get 1 marks in your upcoming examination, right? So when it comes to business cycle, characteristics of business cycle, phases. So these are the two subtopics which are generally part of this particular one, right? So consider the following statement regarding the business cycle. So business cycle is like this. So this is the cycle or things which we generally face. This is a kind of growth, right? This is your peak. This is decline, or which is known as contractions, and this is trough. So this is the trough. Then we have growth, this, similar to this one, right? So the business cycle consists, it is also known as economic cycle. 4 phases: inflation, deflation, growth, and depression. No, this is wrong. We have growth, we have boom, we have contraction, we have trough. So this is they are generally known as this, not this. The timing of business cycle is regular and follow a predictable pattern. This is also wrong. You cannot say ki, like in economy, first we'll have growth, then we'll reach to the boom or peak, then we'll have contraction, then we'll reach to trough. No, there can be, let's say there is a growth, then there is a boom, and it can reach to another, like without achieving this contraction, they can have another growth rate, or another peak, or another peak, or another peak, right? So this is the logic, right? So business cycle influence economic activity and affect individual businesses, 100% true. So what we have to find out, not correct. Incorrect statement means 1 and 2. Option A will be right answer for this one, right? So A, business cycle is identified as a sequence of boom, recession, depression, and recovery, fundamentally. Second is incorrect. Business cycle are not regular or predictable. You cannot, like, you cannot say that they follow regular and predictable means they follow a linear approach. No, they are not going to. They are not going to follow this particular sequence every time. It can be one recession can have followed by another recession, or one boom can have another boom instead of the recession things and all, right? Next one, which of the following statement is not a characteristic of recovery phase? This is the question for your last session, right? So increase in aggregate demand, no, this is the feature of the your recovery phase. When it recover, when economies start recovering, so this is let's say this is the entire things. Let's assume this is the flow. So this is the recovery one, right? Trough, after trough we achieve the recovery. So the aggregate demand will start rising. Rising employment opportunities, yes, it will increase the employment. As the demand will increase, employment will also increase. Increase in bank lending, and obviously this will also happen. Continuous deflation and falling prices, no. Okay? Prices will also increase. That means option D will be right answer for this one, right? So demand increase leading to a price rise, inflation, higher investment, improved employments. Reversing the deflationary terms. Next one, unit number 17, very easy one and most understandable. I hope you all are aware about the fiscal policy and monetary policy, but you have to go through the entire content once, right? So you have to create a differences between the things you have prepared during your exam preparation, bank exam preparation, and here things are in detail, right? So you have to go through all these particular one in very detail. You can completely ignore this COVID-19 impact and all, tool of monetary policy, and your FRBM Act, and fiscal policy. These are some important subtopics from this particular unit, right? So first one, which of the following statement about SDF standing facility, deposit facility. It is a kind of substitute of reverse repo rate. Earlier we have still we have reverse repo rate. So reverse repo rate is the rate at which commercial bank, they generally deposit their surplus money with RBI, and RBI provide collaterals in case of reverse repo rate. SDF is similar to the reverse repo rate, but in this particular case RBI does not provide any collateral, but bank, they get higher rate of interest. So that is the only difference, right? So SDF allow RBI to absorb excess liquidity from a bank without providing collaterals. True. Deposit under the SDF are considered for maintenance of CRR. No, they are not considered for this particular one. The SDF can be used as financial stability tool in addition to liquidity management. Yes, 1 in 3 means option C will be right answer for this particular one. So deposit under SDF are not considered for the maintenance of CRR. One question around the fiscal policy. So fiscal policy involves changes in government expenditures and taxation to achieve macroeconomics goals. Yes, fiscal policy is a subject of macroeconomics. True. Macroeconomics goals may like inflation, money supply, employments, or poverty elevation. Yes. Higher taxes reduce disposable income, which can impact consumption and saving. Yes, true. Disposable income is like income after taxes. If there will be high taxes, let's say you are earning, let's say 1 lakh rupees, and out of 1 lakh rupees, let's say 30,000 take, like there is a flat 30% tax rate, suppose that on 1 lakh rupees. So you have to give 30,000 to the government. Now you have only 70,000 for the consumer. That 70,000 is your disposable income. If government increase that one from 30,000 to 30% to 40%, now you'll have only 60,000 in your hand, right? So that is the logic. Government transfer payments such as pensions and unemployment benefit are example of, no, they are not example of direct purchase of goods and services. No, they are not part of this one. 1 and 2, A will be right answer for this one. Statement third is incorrect because government transfer payments are not direct purchase of goods and services. They provide income supports, right? Unit number 18, which is all about NSA, a system of national accounts and GDP concept. So you can expect 2 questions based on this particular one also. One is around the the question is around the SNA, system of national accounts, which is generally provided by the United Nations, a common system by which economies are going to do some sort of valuation of the economy, like while we calculate the GDP and others. So there are some basic standards, which is generally known as SNA. And GDP, then GDP related concept like GDP, GNP, NNP. So their related concept will be there for this one. Okay? So it can be for 2 marks on an average. It can be one question around this or around this, or it can be half marks or 1 marks, 2-3 question based on this particular unit, right? So which of the following statement regarding system of national account SNA are correct? So this is a 2 marks question without any doubt. So SNA provide an internationally standardized framework for compiling macroeconomics data, ensuring global compatibility. 100% true. The base year revision in national accounts is primarily done to adjust inflation rate rather than reflect structural changes. No, it is like along with the inflation rate, it is also for the to reflect the structural changes. Like for Indian economy, we have base year of 2013-14. Okay? So now we are planning to shift to 16-17. So this is not only about the adjustment toward the inflation, it is also about the like the overall structural changes happen in that particular economy. In 2008, SNA was developed under the guidance of Inter-Secretariat Working Group, National Accounts, which include institutions like Eurostat, IMF, OECD, UN, World Bank, and others too. All UN member nations are legally bound. No, there is no legal foundation. These are kind of advice line, right? So you cannot say it is legally bound. In India, GDP base year changed from 2004-5 to 2011-12 in alignment with SNA 2008 framework. 100% true. So right now we follow 2011-12. But government is planning to shift this particular one to 2016-17, right? So, but right now the GDP base year is 11-12 only. So 135. 135 means option A only will be right answer for this particular one. So the primary reason for revising the base year is reflect structural changes in economy, not just for the inflation. Fourth one, UN members nations are advised to follow the SNA, but it is not legally binding, right? Next one. Consider the following statement regarding GDP and national income calculation. So GDP calculated using the income approach include wage, rent, profit and indirect taxes. It is about how we calculate GDP and others. Okay? So we have three methods: income approach, production and your expenditure method. So the statement is around the income approach. So income approach where we have sources of income, a factor income: land, labor, capital and entrepreneurship. Land we get rent, labor we get salary, wages, entrepreneurs they get profit, and capital we get interest. Now they have mentioned wages, rent, interest, profit. This is true, till here it is true, but they have added and indirect taxes. No, so this only one statement that made this particular entire statement wrong. Net export x minus m. Export X is basically X minus M, export done by India to other countries, M import done by Indians. Okay? So included expenditure method to adjust the international trade. True. Depreciation is deducted from GDP at a price to obtain net national product, NNP. Depreciation is deducted from GDP. It should be outcome is NDP, net domestic product. So this should be wrong. So when we like GDP minus depreciation, it is NDP. When you minus GDP, then like we have a sequence now. First we calculate GDP. GDP is basically all the final value of all the money value of all final goods and services produced within the geographical boundaries of that particular economy. So whether it is produced by Indians or foreigners. When it comes after GDP, if you directly minus depreciation from this one, it is known as NDP, net domestic product. This is the one. The another one is when you adjust X minus M, let's say you are using expenditure method. Okay? So net export, if you are adjusting net export X minus M, so it is generally known as GNP, gross national product. If you are minusing from GNP, if you minus depreciation, it is called NNP. So now this statement is incomplete. Maybe they have mentioned it is like they have clearly mentioned GDP, so it is wrong, right? So it is GNP minus depreciation, which is called NNP, net national product, not GDP minus depreciation is NDP, right? So that is the one. In a product approach, GDP is obtained by summing the value added across all sectors. Production methods we use summing all 100% true. Real GDP is always higher than the nominal GDP. No, real GDP is inflation adjusted GDP. It is lower than the nominal GDP. Real GDP, let's say the marker, let's say a nominal GDP is we sold a marker worth rupees 100. So that is 100 rupees contribution in GDP. While you calculate through the real GDP, you will adjust the minor. You will adjust the inflation. Let's say inflation during the base year. During the base year, the prices of this was 90 rupees. So while calculating through the real GDP, you will consider you sold a marker or you produce a marker worth rupees 90. While you calculate through the nominal, it is 100. So it is a reverse thing and it is wrong. Government spending in expenditure method includes salaries of public servants, military equipments, purchases and all. True. GDP at factor cost is derived by subtracting the net indirect taxes from the GDP at market price. Okay, 100% true. So that means do we have two? So it will start with 2. That means you have only 2 options. So 2, 3, 4, 6, 7. 2, 4, 6, 7. 2, 4, 6, 7. 2, 4, 6, 7. 2, 3. 3 is wrong. So maybe if they have given this particular one, that will be right answer, but this is a wrong statement, right? So these options are incorrect. We have to eliminate this one, right? If it is C, yes. So this is also incorrect, right? This is incorrect, not correct. Depreciation is deducted from GDP to obtain your NDP and DP. When you'll minus depreciation from your depreciation from GDP, it will come to NDP. If you'll minus depreciation from GNP, then it will come NNP, right? So that is the logic. Real GDP is lower than the nominal GDP. Yes, this is the another statement which were given wrong in this particular one. Next one, union budget, the last topic, and very simple one. And you do not have to worry about the latest budget and all. They are not going to ask any question from that particular one. They'll give you some sort of ideas why government is spending more in these kind of sectors and all, what will be the outcome and all, and you guys will be able to handle. This year there was one question, why government is spending more in this one. So it was like related to consumption things and all. So they have given one application based question that you will be able to answer. You do not have to go through all the announcements and all. They are like irrelevant for this particular examination. So first question, which of the following statement about government receipt is are correct? So budget is all about income and expenditure statement. Again. And when it comes to budget, Article 112 of Indian Constitution, it is an annual financial statement, right? So the entire things, the sources of income. So we have two type of budget, revenue budget and capital budget. Revenue budget further divided between two parts, revenue income and revenue expenditure. Capital budget, capital income and capital expenditure. Capital income is borrowings of the government. Capital expenditure, expenditure on creating permanent asset. Revenue income, taxes and non-taxes. Revenue expenditure, expenditure on day-to-day functioning of government departments and all, right? So net tax revenue is calculated after deducting the state share and NCCD transfers from gross revenue. True. Interest receipt, dividends and profit are part of non-tax revenue. Interest receipt, dividends are part of even grants and others. They generally comes under this. Disinvestment receipt are classified as non-debt. It should be non-debt. Disinvestment, where government they generally sell some stake in the their enterprises and all. So that is generally part of non-debt reserve. Government is, let's say, they are selling stake in LIC. So they do not have to pay any interest. They are selling in form of equity shares and others, right? So that is the one. Next one, guys. Next one. Market borrowings and external debt are example of debt receipt. Yes. Total receipt include total receipt include total revenue, capital receipt, and drawdown from cash balances. Yes. So 1, 2, 4, 5. Sorry. 1, 2, 4, 5. Yes. So 1, 2, 4, 5. That means option B will be right on. Option B, no? Yes. Option B will be right answer. So disinvestments receipt are non-debt receipt. They are non-debt. Government, they do not. Debt receipt means where government have some sort of obligation to pay interest or return that money. So in case of disinvestment, they do not have to pay any interest, as well as they do not have to return that particular money itself. So this is all about your IE&IFS Module B. Basically, the entire module is concept driven. So you have first, the very first step is you have to have build your concepts. If you done with that concept things now, believe me guys, you will be able to solve max to max questions from this particular unit as well, right? So from tomorrow onwards, we will start with our unit number 12. One by one, first we will understand the concept and along with a set of practice and all, right? So this way we are going to cover these particular one in coming 7 to 8 days or within 1 week and others. So I have shared the schedule also, and one good things for all of you guys, I'm working on books also, ebooks. So once it is done, subject wise, I have done with RBWM. I'm doing some sort of arrangement and all. Once it is done, we'll upload that, start uploading those particular one as well. And first, then after that, I'll work on IE&IFS. One module is done. So simultaneously, I'll upload these particular things. So you do not have to purchase any book, okay? And you can go through those particular one if you face any sort of challenge. Believe me, if you will not face any challenges if you are following these particular regular classes. These are more than sufficient, but some candidate they do have some sort of anxiety ki they need books also, so you'll get those particular one as well. All right, So this is it from my side. Thank you for joining this session. Thank you for watching this session. Now I'll see you in the next session, where we will be discussing the very first unit from your module B, unit 12, where we will be discussing around the basic of economics, microeconomics, macroeconomics, and different type of economies as well. All right. So this is it. Bye bye. Take care all. Have a nice day. Thank you.